Guys, last year, actually the end of 2021, we interviewed Mohnish Pabrai. Please go look at our interview. It was a great interview. He's a great investor. He's good friends with Warren Buffett and Charlie Munger. And one of the things that he talks a lot about is cloning. He says, I have no problem cloning. What he's doing is trying to mimic other people. And that works for a lot of people. I use it essentially a form of cloning. Not in the sense of I don't find what super investors own and then go mimic it, but I will go look at their thesis in terms of their trust, like Charlie Munger trusting the numbers from Alibaba. He recently said he thinks Alibaba was his worst investment mistake. He bought somewhere around $250 mark or $225 because he thought it was a tech company. It was more retail. He still owns shares, but that was his issue. My issue at Alibaba for a long time was, can I really trust the numbers out of China? That was my biggest issue. And when I saw that Charlie Munger owned Baba, to me it said, okay, he probably trusts these numbers and I'm okay with that. That was I have no problem looking at him and saying, okay, if he trusts the numbers, then I don't mind trusting the numbers. Now his evaluation of the business was completely different than mine. I looked at it as retail. I was actually surprised he even said he thought it was more technology. But be that as it may, what we try to do on this channel is we try to think like value investors. Now, of course, Munger and Buffett believe that value investing is redundant because true investing is understanding what you're buying, understanding that you have a limited risk of permanent capital loss and to get an ample return on your money. Okay? These are through the words of Ben Graham in Security Analysis and The Intelligent Investor. What I'm trying to do is realize that every investment is the present value of all future cash flow. And I want to look at that future cash flow and try to figure out how I can buy as much cash flow as possible for as little as possible. Yesterday, somebody that I met through the community, a guy named Dalton, sent me this website called stockcircle.com. And it allows you to look at all the super investors and it gives you a range of when they bought and how they bought, et cetera, and their portfolios. And I absolutely fell in love with this site the second I saw it. It's a nice way of validating your performance. Here's what I mean. Last year, Warren Buffett's performance, down 7.25%, and he has 49 stocks, okay? Michael Burry, last year was up 11%, and he has 9 stocks. Lilu, growing, very famous, was down 26% last year with 6 stocks, highly concentrated. And look at Micron was one of his top holdings. That's huge. But other things like this, Charlie Munger down 7.8%. Seth Klarman down 15%. Howard Marks up 21%. Guy Spear down 5%. Mohnish Pabrai down 32% and Cathie Wood down the same amount. Mohnish has a very highly concentrated portfolio, 4 stocks, and 77% of his money is in Micron. Cathie Wood, the moron that she is, look at this, 223 stocks and down 33%. Everything she touches goes to crap. And that's where I'd look at it and say, hey, when you have 4 stocks, this is much more acceptable than if you have 200 stocks. If you have 200 stocks and you're down 30% when the market's down 20, you're the problem, right? Now, it goes even further. Click on Guy Spear. It'll tell you the stocks he owns and the percentage of the portfolio, the average buy price, the current price, and their total gains, and the last transactions. And I love this. And by the way, he has Alibaba. He bought an average price of $222. He's down 60% on his investment. Guess how much he cares? If he believes it, he does not care. My cost basis on Alibaba was around $150. So I'm like, okay, I feel better. And I did a tax loss harvest that worked out perfectly for me that allowed me to get some of that 150 basis down even further based on taxes. I'm not going to factor it in there. I still bought Alibaba about 148 or my cost basis. All right, so I'm down about 35, 40%. I'm okay with that. That's what I like about this website. It allows somebody to sit here and look at other major investors and look at what they own and why. You can even look and search for stocks. We just did a video on Dick's Sporting Goods. Let's see who has Dick's Sporting Goods. Okay. Ken Griffin has 90 million. Jim Simmons, who isn't a value investor, he's a day trader, so I'm going to ignore that. Ray Dalio has 2 million. Joel Greenblatt has 452,000. I mean, that's nothing for Joel Greenblatt. So it's really not a big pick for value investors right now. Is that an indication of something you should pay attention to? Well, a lot of these guys have very, very big portfolios. And it's very difficult with such a big portfolio to make outsized returns. And you have to get really big pieces of companies. It says the market cap here is $7.13 billion. I don't know if that's accurate. Is that accurate? Yeah, I have 10.3 billion. So it's not exactly updated, okay? But this is what you can use this kind of website for. Get yourself some ideas. Go find the ideas. If you start seeing a stock that's owned by a lot of super investors, it's a good indication of, okay, I gotta take a look at the stock. Let's look at Apple. Who owns Apple? Well, Warren Buffett has $138 billion worth of Apple. Ken Fisher has 9, Ken Griffin has 750, Jeremy Grantham has 500 million, and so on. But obviously the biggest one here is Warren Buffett. Now you can click on this and see where they think, and it starts from the very beginning. Q1 2006, new holding, 39.2 million shares at an average price of 25 bucks. That's pretty solid, guys. So he's been buying for a while, 125 million shares. So he's done very well on his investment. Okay. And he very much believes in the company. Now, does that mean you should go buy it today? Well, he's increased recently. His last transaction was he bought 3.8 million shares, 3.9 million shares in Q2 of 2022. This might not be updated fully because I think he's bought more recently. The average closing price in that time frame was 151, and the price range was 130 to 178. Look at these wide price ranges, by the way. When I hear people tell me, "Oh, I don't think Apple's going to fall very far." This is 1 quarter. Look at the price range difference in 1 quarter. This is a 20% difference. Easily, more than 20% difference. That's the key here. It's not about, I don't necessarily believe in cloning. I believe in getting ideas from other people and also validating your ideas and saying, okay, but also, I wish there was a way for us to go listen to these guys and what they say against the company. Why are they against this company? That's the reason we have our community, because we like hearing people talk about why they're for and against certain investments, et cetera. And by the way, we're running a special right now, $7 for 7 days. Go to everythingmoney.com and check it out. So on Warren Buffett, you can look at all of his investments. Now, I personally would not go to Warren Buffett to look at his investments. Why? He has such a hard time being able to deploy capital. He's been sitting on so much cash for the last 10 or 20 years that it's been hard for him to beat the market. In fact, he hasn't. But it's because he has so much cash. For him to make a real dent in the future of his fund, he has to deploy large amounts of capital to each investment he makes. Making $1 billion investment is not going to affect his portfolio at all. And that's the problem he has. So what do I recommend you do here? Well, first off, follow us on YouTube. Secondly, sign up for Stock Circle. I think it's free. I love it. I want to add something like this to our website. And also join our website, because this is a great place to take some of these ideas and engage in the thousands of people here who are talking about it. Use these ideas to look at our 8 pillars, analyst estimates, then use our stock analyzer tool to determine what price makes sense for you. Look at Apple. I don't come up with the same price that Warren Buffett comes up with Apple. Is that because he is better or smarter than me? Maybe. I mean, he is smarter than me, but the reason being also is I have much less capital than him. I don't want to buy Apple at 140 or 150. I want to buy Apple at 100 to 120 because I need to get I want to get a much bigger return. I can afford to buy a company that has $500 million market cap that has great potential. Warren Buffett cannot. He has to buy big companies at decent prices to maintain his capital. Thanks very much for your time.